Hi, Jonathan York from Back Financial Partners, looking at the investment markets. Really on the back of the Fitch sort of downgrade for US debt to AA+, Moody's has now come out and downgraded 10 of the regional banks. Now, that's obviously put a little bit of pressure on the US equity market. It's also placed a couple of the larger banks on sort of credit watch as well, with a potential for a downgrade. So US equity is sort of a little bit nervous out there, but certainly the first half of the year have been pretty good. S&P was up around 17%, Nasdaq was up a massive 33%. And signs for the US economy as well, it's not doing too badly. Latest jobs data coming out, there was 187,000 jobs created. That was versus an expected of sort of 200,000. So maybe sort of slightly weaker on that, but still, a reasonable number going forward. Although the latest PMI data was still a little bit soft. But potentially with that sort of employment data coming through, it maybe points to the fact that the Fed has managed to sort of engineer a bit of a sort of a soft landing, even despite the rate hikes we've seen over the last 18 months. And indeed, interest rates seem to sort of stabilised. 10-year is trading just over 4% at 4.01. And the 2 years backed off quite a bit actually. It's trading at 4.74. Now, what is interesting as well is in the sort of cash and sort of cash equivalent sort of money funds out there, there's around $5.4 trillion. And certainly when investors are looking at it now with the returns on the Nasdaq, I say over the last sort of 6 months of 33%, S&P around 17%, when you're only getting sort of 4 or 5% on your sort of cash fund, potentially some of that money will be looking for a fresh home. The last of the sort of big heavyweights reported last week. Apple was probably slightly disappointing. Amazon, though, was much better than expected. Now, on the presidential race in the US now, President Trump has again been indicted on further charges regarding the Capitol riots on January the 6th. Now, on the back of the fact that the US economy potentially doesn't go into a major recession now, and it can sort of be engineered to have a soft landing, oil sort of spiked above sort of $80, currently trading around 82.95. Interesting in the UK, the Bank of England hiked rates again by a quarter point, taking the base rate to 5.25. Now that's the 14th consecutive hike and the highest level in rates there for 15 years. But quite interestingly, one of the big mortgage players, HSBC, did actually cut its mortgage rate in the UK last week. But interestingly, the vote wasn't unanimous. It was 6-3. Two participants wanted a 50 basis point hike. One wanted rates left unchanged. Now in Europe, with the ECB taking the rates there to 3.75, many are saying potentially this could be the top. especially with Europe grappling some pretty major sort of natural disasters out there. You've had the wildfires, and now Spain is running into some issues with sort of water and sort of rationing. The lack of rainfall there over the first sort of 4 to 6 months of the year really placing Spain in a pretty precarious position. In Australia, a continuous sort of thawing of the sort of hostilities between sort of China and Australia is potentially looking at helping that Australian economy. The latest issue has been China has dropped its barley tariffs. That's the first time in 3 years. And potentially now looking at other issues as well, and if wine is sort of included now with a reduction in sort of tariffs or removal of tariffs, that'll give a major boost to the Australian economy. And certainly there are signs in the economy that there is a sort of growing optimism out there. The housing market seems to have recovered and indeed is starting to increase in certain areas. Now here in New Zealand, some bad news out there for the sort of dairy sector. Fonterra has now reduced its sort of payout for the next season, putting the mid price now around $7. That's come down by $1 from $8. Potentially that takes about $1 billion out of the economy. Well, potentially at sort of $7, that's sort of right on sort of break even for many farmers, and even for some it could even be running at a loss. Obviously, with each week that passes now getting closer to that election date, and again, you know, the news out there for the government really doesn't appear to be getting any better. And in terms of sort of uncertainty around that election as well, it's sort of hampering New Zealand equities as well. New Zealand equities so far for this year is up only around sort of 2.8%. Whereas you compare that with Australia, up around 5.5, and obviously the US up is substantially more than that. But again, as with Australia, there are signs out there that the housing market has sort of started to sort of bottom out, and again, in some areas, it's actually starting to increase. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.